Investors were sticking to the sidelines today as the end of the tax year fast approaches. I spoke a little earlier to Michael McCarthy, Chief Equity Strategist at CMC Markets. Well, Michael McCarthy, investors couldn't really make up their minds today. Was that all the uncertainty with the EU summit?
Yes, investors once again remaining on the sidelines as they have done all of this week. It's not just buyers on the sidelines, it was also the sellers. And although the market opened very positively today, the Australia 200 index up 30 points at the open, we actually saw selling over the rest of the day. Volumes, however, were very light. Less than $4 billion worth of shares changed hands, and there's no commitment, and there's unlikely to be any until the markets have seen the whites of the European leadership's eyes.
Oh, well, hang on there. Now, the energy sector was the worst performing, and Santos rattled investors.
Yes, and this was despite a rise in the oil price of more than $1.50 a barrel overnight. Santos announced today that it was bringing forward, as it put it, $2.5 billion worth of costs associated with the Gladstone LNG project. Now, Santos is the 30% owner-operator here, so it will contribute around $750 million, but the market was very displeased to see this. These costs were originally going to be paid for by production of gas after 2015, and while the company insists that the cost profile of the project hasn't changed, the market didn't treat it that way, and Santos shares were put to the sword today, down more than 5%.
Caltex, on the other hand, pleased investors with its profit outlook.
Well, it certainly did. Investors overall were quite pleased. Its shares finished up 1%. However, it did fool the day traders. The announcement before market gives the two measures that Caltex uses to measure profit, and one of them looked much better than it had previously. That saw the shares rocket more than 7% higher in the first hour of trading. But as the traders drilled into it, the analysts got a chance to have a say about that increase in profit and pointed to the other measure. We saw the share price pull right back. A good result, but not as good as the market originally thought.
Finally, to the media sector, and Fairfax shares are still under pressure. Is there any hope for a turnaround, do you think?
At this stage, there doesn't seem to be, with Hancock Prospecting standing aside at the moment and the market unsure about its intentions, given that the board has rebuffed its move to garner seats. We're not sure what will happen next. Hancock could sell its shares, forcing the Fairfax share price much lower. It could decide to buy more or even launch a full takeover bid and send them rocketing higher. So the market very indecisive today. We did see reasonable volumes, but the shares finished down around 3%.
And Seven West Media shares also seem to have had a poor session.
This appears to be about the management change at the top. David Leckie is a very respected figure in media circles. His long experience in television in particular was well regarded, and the ending of his 9-year tenure as CEO at Seven has the market concerned. Add to that his replacement, Mr Don Volti, is known for his aggressive management style, and while he was CEO at Woodside, presided over a number of slip-ups operationally, there are concerns about how Seven West Media will go in the future. Its shares were also marked down heavily today.
All right, Michael McCarthy, thank you very much for joining us.
Thank you.